U.S. stocks fell today as the Federal Reserve Chairman gave a stark warning to the nation and the world about the impact of President Trump's tariffs on the economy and inflation and higher prices for consumers. Let's bring in CNN's Phil Mattingly. Phil, what exactly did Chairman Powell have to say?
I want to put this in three parts because I think it's helpful contextually. The past, the now, and the going forward. In the past, the Chairman made very clear the U.S. economy right now is in a solid position, and that backs up everything we've seen in economic data over the course of the last several months on inflation, on unemployment, on growth. It's in a solid place. So the Fed doesn't feel any need right now to move, in large part because the now. What Powell was saying about the level of uncertainty out there, not just for business leaders trying to figure out investments or which way to take their companies, but for the policy officials about what to do next. He said, historically unique developments with great uncertainty. This is the guy who's going to be critical if things go bad, and they have no idea and nothing to kind of tether it to as they think through their next steps. And then he said this.
Unemployment is likely to go up as the economy slows in all likelihood, and inflation is likely to go up as tariffs find their way, and some part of those tariffs come to be paid by the public.
Now, that obviously runs counter to what President Trump and his economic team have said. Powell went on to say he believes it's going to stay that way for the balance of the year. So he expects this to be sustained over time. And the problem becomes if that starts to spiral on some level, right, where inflation is going up, growth and unemployment are sluggish or problematic, that runs directly into the dual mandate of the Fed. They're going to have to make a choice, and it's a very difficult one, which side to help.
And usually it's one goes up but not the other.
Yep.
This would be a double-barreled
shotgun.
shotgun.
If inflation is high, you raise rates, you cool things down. If unemployment or growth is problematic,
to have high unemployment and high inflation,
it is at the worst case stagflation.
It's a double whammy. Looking at the broader picture here, the Trump administration is taking on a lot, and they're facing a lot of heat all over the place. The economy, pressure from the courts on the deportation efforts. Now, obviously, it is the Trump administration's want, indeed the want of every politician, to act as if they're confident everything's going great. Are they feeling that way behind the scenes?
They believe right now that what they have seen in the early stages of what countries are willing to put on the table is exactly the type of response that they would have wanted. The caveat to that is the rollout was not what the top economic officials would have thought or planned. The process going forward is so heavily contingent on making progress on bilateral deals that traditionally take years that the stakes are really high, and this is a high-wire act without a net. And they're also seeing things that I think underscore the market volatility right now. You know, retail sales numbers were at their highest level in 2 years. People are stocking up, right? They're trying to get in front of this. They're trying to front-run inflation and prices that they know is going to go up. And then you have NVIDIA, the chip maker, taking a $5.5 billion charge today because of export controls that they thought their chips were created to cut underneath, meaning they believe, and this is showing, they are dead serious about the China element of this trade war, and it's probably going to be for a long time.
With us now is Douglas Holtz-Eakin. He served as chief economist on the President's Council of Economic Advisors under President George W. Bush. He's now the president of the American Action Forum. Doug, thank you so much for being with us, as always. So you heard there from Jerome Powell, higher inflation, slower growth. Consumers are going to pick up the tab on a large part of these increased tariffs. What do you imagine is going to happen here if this scenario goes on without newly negotiated deals?
Well, if things stay as they are now, I think what you'll see is a series of reports for the remainder of the data on March that'll be surprisingly strong. And everyone will think, oh, gee, maybe they didn't get this right, because people went out and bought things in anticipation of tariffs. A lot of businesses built their inventories in anticipation of these tariffs. And then I think once you get to the second quarter and start seeing the data, it's going to drop off sharply. And that's going to be exactly what the chairman was worried about, a real decline in the growth of employment, perhaps even a drop in employment, an increase in the rate of inflation. And the other part of his remarks are really devoted to his concern that inflation be a temporary and one-time phenomenon and not be allowed to become an enduring phenomenon, as we saw over the years since 2021. So it was, I think, a very, very clear warning to the American people and to the administration about the consequences of what's going on right now.
Notably, President Trump says he's attending a meeting at the White House today with Japanese officials to negotiate tariffs What are you looking for to come out of that meeting?
You would hope that we can find a way for the tariffs to be reduced, but remember, the negotiations are in principle focused on the so-called reciprocal tariffs, which got paused for 90 days. We still have in place a 10% universal tariff, an unprecedentedly large tariff for the United States. We have the steel, aluminum, and auto tariffs. He's promising pharmaceuticals and silicon chips and copper and lumber, and those tariffs by themselves are comparable to the tariffs known as the Smoot-Hawley tariffs in the Great Depression. So the things they're negotiating about leave in place an enormous tax increase on the American people and a real headwind to the capacity for this economy to continue to grow.
Do you see the news that Japanese car maker Honda is going to shift some production to the U.S., partly due to tariffs, as a win, as a positive development?
I don't see it as a win at all. You know, they're going to shift it because they want to try to maintain their part of the market share. But for the economy as a whole, the tariffs are what they are. And the American consumer is going to pay them. We're going to have the higher prices and slower growth. And in the end, we're not going to see a dramatic change in the production patterns. Honda was already here. They can moderately rearrange their production lines. But we're not going to see global car makers concentrate in the United States and produce only here. That's a very unlikely outcome.
So Beijing has said that they are open to trade negotiations, but Trump has told his team at the White House that President Xi needs to make the first move. Some Trump administration officials told Chinese officials that Xi should request a call with Trump. I mean, who blinks first? Who picks up the phone first to call the other leader?
I don't know. The history of these kinds of episodes, trade wars, are tit for tat. And the really, I think, troubling part is that they take a long time to unwind. The last great trade war in the Great Depression, we spent most of the remainder of the 20th century with the GATT rounds and the WTO unwinding those tariffs. It was decades, not years, in unwinding. And that's the way we cemented in place economic alliances to confront the Soviet Union. It would be wise, if we're concerned about China, to be doing that work with our other allies in Europe and the Pacific region instead of confronting them and losing their support.
Doug, I had a really fascinating conversation with Kevin O'Leary earlier this hour, and he was talking about the potential for there to be some kind of European Union-like alliance between the United States, Canada, and even Mexico, perhaps a unified currency, a sort of a Schengen zone where people can travel freely with a unified passport. Is that realistic, number one? And number two, would that provide enough economic weight to the United States and its allies in North America to really compete with China moving forward on energy and AI and all the other breadth of competitive issues between the two nations?
So there are really two things for that. Number one, what he's talking about is a customs union where we would have a unified tariff, say, toward China in Canada, Mexico, and the United States. And I think the president, in his heart of hearts, would like something like that. He's very frustrated by the fact that the tariffs he put on China back in 2018, they turned around and started shipping things to Mexico and then into the U.S., to Canada and then into the U.S. So I understand that. The second part about sort of the economic strength, we have that. We had a unified economic entity in North America. There were, restrictions for travel at the border, but they're not severe. And the president is the one who's unwound that. It is his 25% tariffs on Canada and Mexico that are threatening that strength. He'd be wise to back down completely on that. It was interesting that on so-called Liberation Day, he didn't put any additional tariffs on Canada and Mexico. That's good because there was enough damage done there. He should do no more, and we should keep that strength in place.
China is taking the trade war to a new battleground. America's TikTok feeds. U.S. users are now seeing clips urging them to buy directly from Chinese factories. In fact, one TikTok video claimed that luxury goods buyers are already purchasing Chinese manufactured products despite what their labels may say. Watch this.
Say as long as there's a tag saying made in China, the bag can never be luxury. However, in fact, more than 80% of the luxury bags in the world are made in China.
CNN's Claire Duffy has been digging into these TikToks and those claims. So, Claire, what did you find here? I mean, there's some talk about some major labels, well-known ones, Lululemon, Chanel, made in China?
Yeah, there are a number of major U.S. brands that do produce in China, or they have components that come from China. But these videos that we're seeing where you have people who claim to be workers or managers at factories that produce for these big brands and telling people that if they buy directly from them, they can pay lower prices, they can save on the cost of tariffs. This has become such a big trend that a number of Chinese e-commerce and wholesale retail sites have shot to the top of the App Store. We're seeing DHgate and Xiaobao really gain popularity in the last few days. But experts warn that the people in those videos are almost certainly not the owners or workers at factories that manufacture for big brands. And that's because the factories that work with big brands, they sign contracts that require them not to talk about the names of the big brands that they're working for. So now we're seeing big brands like Lululemon disavowing this trend and warning people that they could be scammed if they engage with the people in these videos.
But Claire, I'm asking for a friend here.
I'm glad we clarified that.
Yeah,
It has nothing to do with Boris and his
If someone
needs.
decided to go ahead and buy directly from these Chinese suppliers, would they avoid these tariffs?
Almost certainly not. There are now
Wow.
145% tariffs on China, as you know, and Trump has gotten rid of what's called the de minimis exemption. That was an exemption on tariffs for packages that are worth less than $800. That is going away. So now, even if you order a single pair of leggings, you're probably going to be still paying higher prices than you would have before the tariffs.
Interesting.
Sorry, Boris. It's not really the news you wanted to hear, is it?
The de minimis exception strikes again. Claire Duffy, thanks so much. Appreciate it. So we've been watching markets for what feels like about 2 weeks now.
It feels like a long time.
Yeah.
But every day it is remarkable how every day there is something new. And the way that we watch it play, right? So maybe 25 minutes ago, the Dow was down 2.3%. Now it's recovered half a percentage point.
Yeah.
But this, of course, is what we're watching after those comments from the Fed chair.
And you could track exactly when those comments came out. Right around 1:30 p.m., you see that dip. There was a blip of green earlier in the day. But of course, all this comes as there's so much uncertainty about when some of these deals that the White House has stipulated may come from other nations may be brokered. We know that President Trump is meeting with Japanese leadership today. Perhaps there's an announcement on the horizon.
Maybe we will be watching. But yeah, there are a lot of questions to your point about when there will be one of those deals announced and what it will ultimately mean. Could it make other deals follow along?
The close of the day on Wall Street. There is the closing bell right there. Just a few seconds before 4 p.m. Those steep losses, including the Dow sinking, as you can see, about 700 points. I want to get straight to CNN's Phil Mattingly. Phil, let's show everybody the numbers there. The Federal Reserve Chairman Jerome Powell spoke today and seemed to precipitate what we're seeing on the street. Explain.
Yeah, I think markets are reacting, one, to reality on some level, which is that nothing's really changed over the course of the two rather calm market days that we've seen. There is still the largest tariffs in more than a century. There's still an ongoing trade war with China, and everybody's waiting for some development on negotiations on bilateral deals or the potential for them. What changed was mostly the Fed chair coming out and making very clear this point. Take a listen.
The level of tariff increases announced so far is significantly larger than anticipated, and the same is likely to be true of the economic effects, which will include higher inflation and slower growth. Both survey and market-based measures of near-term inflation expectations have moved up significantly, with survey participants pointing to tariffs.
Now, Casey, on top of that, there were two additional points Powell made building off of what you just heard that I think are extremely critical to pay attention to right now. One, the expectations are that situation he was describing on economic conditions and inflation is a situation that he said expected to play out over the balance of the year. So it's going to be longer term. It's not going to be something that turns around immediately. The second is he raised the prospect of these Fed's, quote, dual mandate, their statutory requirements as the Fed, at some point coming into tension with one another. So the Fed has two roles, right? You keep prices stable, you deal with inflation, and you also keep employment low, full employment. When those two things run into one another, what he's saying, to translate, is the potential for stagflation, something we haven't seen in a real tangible way since the 1970s. It is the worst nightmare for a Fed chair because what they can do with rates, what they can do with QE, handles one of those issues. When they're running into one another, which isn't supposed to happen, they're out of tools. You're kind of like a soccer goalie that has to pick on a penalty kick which way you're going to dive and just hope you pick the right direction. That is a pretty stark warning. And I think that, more than anything else, is what markets are paying attention to.
Yeah, for sure. And of course, the Fed chairman is so measured in the way that he speaks. It makes the weight of a statement like this all that much heavier. Obviously, we have other public figures who are not so restrained and careful with the words that they choose. He does not share that characteristic. Phil Mattingly, always grateful to have you start the show. Thanks very much. All right, our panel is here. CNN legal analyst Elliot Williams, CNN political director and our Washington bureau chief David Chalian, CNN political commentator, former Biden White House communications director Kate Bedingfield is here, and CNN senior political commentator Scott Jennings back again. Thank you all for being here. Really appreciate it. David Chalian, let me start with you, big picture on this economic situation. Obviously, there are a number of battles that the White House seems eager to fight with Democrats. We're going to get to some of that later on in the show. But what is going on in the economy represents a really fundamental risk for President Trump, for Republicans. And there has been no small amount of chatter of them saying, well, we'll do this with the tariffs. It'll cause the Federal Reserve to lower interest rates to the floor. Businesses will explode and the economy will take off. The Fed chair today seems to be saying, yeah, no, sorry.
I mean, to hear the Fed chairman just say so clearly that this policy is likely to lead to higher inflation and slower growth, it's like at the core, the two things that Donald Trump promised Americans on the campaign trail last year would be prices would come down and there would be robust economic growth. And the Fed chair today is in direct contradiction with that if he turns out right. I mean, that's his prediction of what these policies will be. If that is right, I think that poses a political problem, as you note, yes, for Donald Trump, but really far more immediate in the 26 midterms is for his party up on Capitol Hill.
Yeah, well, and it also presents a problem for a lot of Americans, Scott Jennings. I mean, again, the Fed chair, Jerome Powell, picks his words very carefully. He also has, there has been no small amount of tension between him and President Trump. I would just point to this Wall Street Journal headline from November 7th, 2024. You may recall that's about the time that Donald Trump won the election, when Powell says that he won't step down if he's asked to by Trump. I don't imagine that the president is very happy about what the Fed chairman had to say today. Do you see a brewing standoff?
Yeah, I wouldn't expect tickets to the Easter egg roll if I were Chairman Powell right now. Look, I of course, and I'm sure President Trump's going to react negatively to this statement today because he sees it much differently. He sees this as a long-term transformation of the economy. He sees a number of investment announcements that have happened that disprove all the apocalyptic doom and gloom, and he has already said he's willing to accept some short-term pain, and he's asked the American people, or at least his supporters, to accept that as we transform the economy to the benefit of the working class. However, the problem is and will be the trajectory of the economy in the minds of voters come next summer, late summer, and the fall. I think they actually will accept a continued amount of turbulence if they think the trajectory is good. That's really the measurement of how people feel. I don't think all the problems have to be fixed because they know there were myriad problems under the previous administration. But if they think they're on the right track, they'll give them some more leash. If they think they're on the wrong track, that's when you start to run into problems with the voters.
That may be, but I think the challenge Trump's going to have here, I mean, there's so few things that a president truly has control over in office. You make all these promises on the campaign trail, you come into office, and then you have to deal with the world as it is. The thing that is so interesting about this is that the chaotic implementation of these tariffs is a huge piece of what's driving the uncertainty in the market and the challenges here. And so it may be true traditionally that if people feel like the economy is moving in the right direction, they're willing to give the president leeway. But Trump has stood up and thrown his arms around this and said, this is my problem. I created it because in 10 years or 15 years or 20 years, things are going to be better for you. I think it's going to be really tough in the fall of 2026 to ask voters to say, well, just hold your nose and just wait, and it's going to get better.
Moreover, it's to pick up on both David's and your points, Kate, the certainty with which Donald Trump came in saying, look, in effect, I alone can fix it, to echo the point that he made several years ago, that what I will implement will ultimately fix the economy and make things better for all Americans. Yes, he has some runway, but that runway is getting much, much shorter.
I do think some of the chaos may seem reduced if over the next few weeks they do roll out a series of announcements with trade deals with individual countries. I mean, they're obviously in deal-making mode. This is what he was put on this earth to do, make deals. Countries are coming to the table. So if they start to say, here's our deal with Japan, here's our deal with Vietnam, here's our deal with all these countries, and we're actually building a coalition to isolate China, I actually think that could make it seem like the chaos is being reduced, and people start to see the end game here, which is a stronger America and a weaker China on the internet.
Fair enough.
That would also require him, but that would require him to stick to whatever deal he negotiates. I mean, part of the challenge is, you see the Commerce Secretary or the Treasury Secretary come out and say, well, actually, no, there's going to be an exception on chips, and there's going to be an exception on phones, and then Trump says, well, I don't really like the word exception. So, I think Trump has a credibility challenge here. It may be that he's able to successfully negotiate all these trade deals. I'm not sure the market is going to believe him, even when he comes out and says these are the terms, because he himself hasn't stuck to his previously set agenda here.
And the bigger point is that not all trade deals are created equal. And yes, we can strike trade deals with Sri Lanka and Vietnam, but none of these countries have the power, to harm the American economy that China does, and without a consideration of China. Yeah.
And just to your point about Powell, you showed that Wall Street Journal headline, I think it was from the election time. I think it was just yesterday or the day before, Treasury Secretary in Argentina talked about starting to interview or come up with a list of people of thinking of new candidates, because when Powell's term ends next year, Trump is going to be in position to. And the fact that it was like out there yesterday from the Treasury Secretary already seeding the ground of trying to look at the post-Powell era. To Scott's point, I would be very surprised if Donald Trump did not react negatively to what the Fed chairman said today.
Well, and Scott, can you just be realistic with me? I understand you're presenting how the administration is looking at this. We're going to talk for a second about deportations. We're going to talk later in the show about transgender athletes, right? There are all these fights that the administration is generating, is picking in many ways. Realistically, is the economy the riskiest ground for the president right now? Is this the biggest question mark for him on a very long list of very contentious issues?
Of course. The economy is always the riskiest ground for any president, because you tend to rise and fall based on how people think you did with it. So when you make sweeping changes to the way our economy works, the way it's going to work around the world, there is a lot of risk in that, but there could also be a lot of reward in it if people see the end game, which is we isolated China, the working class feels like better jobs are coming back to decimated communities. So there's a lot of reward here, but it could take some time to get there. I will say on the other fights, I think they're on the right side of virtually every fight they're picking. I mean, you mentioned some of the cultural fights they're picking. Immigration's his best issue right now. These are not inconsequential matters. I mean, on a lot of these things, he's on the 80, the Dems are on the 20.
In our money lead, stocks slipping again today after new comments on tariffs from the chairman of the Federal Reserve, Jerome Powell. Take a listen.
And inflation is likely to go up as tariffs find their way, and some part of those tariffs come to be paid by the public.
This grim statement comes as the Commerce Department says that retail sales surged last month, but economists are warning that those could start sliding soon as well. CNN's Richard Quest joins us live from the New York Auto Show. Richard, what are you hearing there about fears of these tariffs?
Oh, they're terrified because they don't understand how it's going to affect the industry, the difference between cars that are fully imported, those that are domestically produced, and those that are within Canada, US, and Mexico, within the USMCA. They're trying to work out what it all means. And by the way, that's a sound from Jerome Powell, the truth that dare not speaketh name. It's clear. Everybody knows the reason sales were up was because people were buying things before the tariffs arrive. You wait for a few more months and see what car sales look like.
Richard, what else stood out to you watching the stock slip after Powell's comments about tariffs causing uncertainty and then also causing inflation?
What stood out for me is that the market continues to hope for the best and then be surprised when the obvious happens and things turn turtle and go down. We know inflation's coming. We know there's going to be a slowdown. The WTO today, World Trade Organization, came out with their own report showing the fall off in global trade. It's happening now. It'll probably get worse unless there is relief. And that is what the market is just pricing in. The market continues to price in more and more down bad news.
Richard Quest, thank you so much. We've been talking for weeks now with small business owners coast to coast about Trump tariffs. Some of them support Trump, some of them don't. Some of them are happy for the tariffs, most of them are not. And not all of these business people are actually so far away from the White House. Diane Gross and Khalid Pitts, for example, are the co-owners of Cork Wine Bar here in D.C. It's a great place. You should check it out if you're in D.C. Diane, the business imports wine from the EU and other countries. There's still a tariff on that, even with the 90-day pause. How are you handling the costs right now? Do they just get passed on to the consumer?
Well, first, Jake, let's first say thank you very much for having us on and for keeping this issue in the top of minds of the American public. As you said, we're a small, independently owned and run hospitality business. Not unlike other hospitality places across the country, we are more than just a place to eat and drink. We're a part of the economic and cultural impact of these communities. Small businesses like ours employ 3% of the U.S. workforce. We generate $75 billion in wages and over $209 billion in revenue for these communities across the country. And a raise in the tariff, which is a tax, will have a significant impact on our businesses across the country, more importantly, on our customers and the guests we serve.
So
the last thing that we want to do right now is raise prices on gas for sure, because prices are already going up on labor and on all our other costs. So we want to try as hard as we can to not pass on those costs to our consumers.
Yeah, no, sure, of course. Khalid, I understand you two launched 2 other projects before the tariff announcement. Did you anticipate the impacts that tariffs would have on those other endeavors?
No, we signed those leases before the tariffs were introduced.
What were they, if you don't mind my asking?
One business actually is another wine store and wine bar where we signed the lease actually 2 days before the tariffs were announced. So you can imagine how surprised and concerned we were when the original announcement of 200% tariffs took place. And the other is going to be a fast casual restaurant, which is our concern is with the food costs on the tariff costs on food for that, and also some of the costs for the supplies and the different things that we will be using to build out the kitchen and the other parts of the restaurant.
Do you find customers more likely to order, for example, a wine from Napa than from France?
Well, unfortunately, we specialize in old world wines, so 95% of our wines come from the EU, so we don't really have that opportunity to offer them an alternative. We do have a small selection of wines from the U.S., but primarily in the 17 years we've been in existence, we have focused on and built our brand on old world wines, so France, Italy, Spain, Germany, and Austria. And that's what we do. So there's not a lot of opportunity for us to pivot to something else. And also there's not enough U.S. wine, even if we wanted to pivot, to be able to offer that to our guests. So for us, we're very dependent on European imports, and we're very dependent on it to run our small business.
I think that, Jake, there's a misnomer that this will help the American producer. This will actually hurt the American producer and the American independent wine importer.